Ginzo VI! Onegai shimasu! Okay, welcome back to the channel. So far, we've covered a lot in this series of value investing. In this video, I'm going to close the series with some my thoughts about kind of decision process I take when deciding to sell a position I have with the company, and also a few other considerations about value investing. Okay, so let's jump into it. Okay, so more specifically, the themes that we're going to cover are going to be when I decide to pull the plug on a position I have. Also, a little bit of thoughts about taxes and how do you need to be aware of how much you're going to pay for the trading that we're going to do. And also, some final considerations about, value investing. Right, so we've covered this in the last video. This is a few things that you have to keep an eye, especially on companies that you either are about to invest, being on your watch list, and more specifically about companies that you may own. So this is the sort of things that you need to keep an eye on. We've covered some of these topics in the previous video. So kind of jumping into a little bit more about the financials, let's imagine that we have invested in a company a couple of years ago, and let's say in 2016, and that we hope that that company would evolve positively over time, right? Having done the financial analysis that I've showed you in the second video of the series, you can clearly see that this company in questions, in this case General Electric, has not had a great performance in the last few years. Okay, their revenues have been slowing down, have been decreasing. Their free cash flow had also been decreasing, and perhaps even more importantly, the equity of the shareholders as well as the earnings per share have been decreasing significantly in the last 6 years. Okay, so I mean, this is a company that if I had owned shares in this company, I would probably be thinking about selling my position. Okay, especially in this current market where the prices are significantly higher than they should. Okay, so imagine that you had bought some shares of GE in 2016, 2014, and you have seen the company decline in earnings and in book value. Okay, and more importantly, you've made an assessment of the fair value of the company, an intrinsic valuation of the company, like the one I've showed you on video 4, and we came up with a fair value of $11.72, $11.72 for the company shares. Well, they're trading currently, as of today, at $12.95. So they are above our fair value of shares. If this is a company that I'm not confident about, that I'm not sure it will bring value to the shareholders in the future, then I may decide to sell it, right? It's always good to keep an eye on what's going on in the news around this company. So in this case, as you can see here on the right-hand side, you have G stock sync after proposing a reverse stock split, okay, above, and G is paying down billions more in debt, sending the stocks higher. So, based on the information, you have to make a decision. Based on your valuation, based on your validation of the company, based on the financial analysis and the performance of the company in the last 5, 6, 10 years, based on the current price of the share, based on the news. What decision are you going to make? Are you going to, well, buy? I would suggest not. Are you going to hold or to sell? My personal opinion is that if I had bought shares at a lower value than $12.95, I would probably be selling this position and investing my money in another company that I was more confident about. If I had bought my shares at a higher price than $12.95, I would probably wait a couple of months to see how the market reacts to the reverse stock split. Okay, so the reverse stock split is going to be, they're going to reverse back the stock split, meaning that they probably are going to transform 2 or 3 stocks or 4 stocks into one, so that the stock price will be higher, right? There will be less stocks in the market, in the open market, and hence the price will be higher, right? So again, just to summarize, if I had bought my stocks at a lower value than $12.95, I would probably be selling and investing in another stock that I was more confident about. If I had bought my shares at above $12.95, I would probably wait a couple of months to see how the market reacts to the reversed stock split that has been announced. Okay, so this is kind of the decision process that you have to go through to evaluate if it is time to sell your position on a business or not. Okay, right. So I think it was Benjamin Franklin who said that there are only two certain things in life, and that's death and taxes. And I'm sure about those two. Regarding taxes. I mean, it depends on where you live. If you live in the US, if you live in Europe, if you live in Australia, I mean, it's going to depend on your tax and the taxes that you're going to pay on capital gains. So you do need to be aware of that. I mean, it is not difficult. So, people make it more complex than it is. It's quite simple to have an overview of what are the tax implications for capital gains for someone that invests in the stock market. Okay, in the US, there is a distinction between short-term tax rates and long-term tax rates. So if you hold a position for less than 12 months, that is considered short-term tax rates, and you'll be charged at a higher rate than if you wait a longer time and only sell after 12 months. I believe that's the case. Okay, so be aware of that. Be aware of how much you're going to pay in taxes, because every time you sell and you make a profit, you are liable to be taxed on those profits. Okay, so it's always wise to know when you should be selling and what is going to be the tax applied to your transaction. Okay, then the second thing that you need to be aware is that you're also paying taxes on dividends, right? So it's also considered a capital gain. You also have some tax difference between just buying and selling stocks and dividends. Okay, you need also to be aware of those tax implications. But it's also important to know that there are some companies that offer you a reinvestment of the dividends. Okay, and in those cases, the company, instead of paying you out the dividends, they will translate that dividends into more shares for you. Okay, and in many countries, that means that you are not going to pay taxes on those dividends, because they won't necessarily go to you. They will be reinvested in the business. Okay, and you'll be awarded more shares rather than cash. Okay, so pay attention, especially for you guys out there that love dividends and love dividend stocks. be aware that there may be some tax benefits in reinvesting your dividends rather than cashing in, okay? And third, last but not least, I mean, this is extremely important, right? Be aware of trading costs, right? Remember the famous phrase, there is no free lunches, right? And that's the case. There is a lot of trading apps out there that do not charge you a dime for your transactions, for buying and selling stocks, okay? But mind you, those companies need to make money, right? So the money comes from somewhere, and it may not come from you directly, but they will come from a third party, usually the broker that sells you the shares, okay? And if that broker is going to have to pay some money to the trading platform, right, that money is probably coming from you, because meaning that you're probably paying a little bit more from your shares because you're using a free trading app that that does not charge you for any transaction fees, okay? For those out there that prefer traditional brokers and not trading apps, there are usually fees associated. I personally trade through my bank brokerage. I do have the option of trading through an app where I would not pay any transaction costs. I've decided that I would prefer to pay a little fee, but have my bank brokerage the transaction. Okay, it kind of gives me a little bit more security. I'm investing my retirement. All my retirement money is being invested in the stock markets. I want to make sure that the money is in a place where I can get access if something happens. Okay, when you invest in a brokerage app, they're not really a bank, right? So you're actually giving them your money, and I mean, knock on wood, but if something if something happens to that brokerage entity, your money is lost, right? The government is not going to back you out because they are not an official bank, okay? So be aware of that. Be aware that in some countries, maybe it's better to pay a small fee and have your bank, your traditional bank, as your brokerage, rather than having an app from a company that you don't know where they're based from, you don't know the liquidity that they have, you probably don't have any protection in case they go bankrupt. Be aware of that. It's your decision, it's your money. Be aware of trading costs and be aware through which platforms you trade, right? Okay. All right. So, and then my final considerations on value investing. I mean, value investing is for everyone, right? It's not rocket science. I think I said it in the beginning. If you know basic algebra, basic arithmetics, I mean, you can invest, right? It's not rocket science. It's very easy once you get the basics of it, and it's, in my opinion, the safest and best way to invest. Okay, this is particularly important for people like me that invests for the long term and are investing for retirement. Okay, I don't plan to become rich from investing. That's not the plan. The plan is, I like what I do. I like my job. I want to continue to to work. So, this is a long-term plan, and this is to ensure that when I retire, I get the benefits of having a great retirement without losing any sort of quality of life, of living. Okay. Having said that, maybe value investing is not for everyone, right? If you're looking at becoming rich, right? If you want to be a millionaire, a billionaire, I mean, value investing won't get you there, in all honesty. There's not a people out there that says that out loud, but that's the fact, right? Value investing will not make you rich, okay? Now you may say, well, look at Warren Buffett, look at Ray Dalio, look at Charlie Munger. They're billionaires. Why can't I do the same thing? They're investors. They are value investors. Why can't I do the same thing? Well, in reality, they are value investors, right? But they didn't become rich from doing value investing, right? They become rich by creating companies. Okay, that's how they got rich, right? They bought or they created their own companies, and they do a lot of investing. Warren Buffett, for example, he does a lot of value investing in with the spare cash that their businesses generate. Okay, if you look at Berkshire Hathaway, Berkshire Hathaway has been buying companies, whole companies, right? They have insurance companies, they have railroad companies, they have energy companies that they own, right? And that's how they generate the majority of their revenue, right? Because those companies generate a lot of cash, okay, they then use that cash to invest, to do value investing in the stock market, right? Ray Dalio does the same thing, right? He owns his own company, right? It's Blackrock, and he uses it's an asset management company, and then he invests his money, and the investors who invest in his company money into the stock market, right? But they're not rich because they do value investing. They are rich because they've created successful companies, right? And I think this is my advice for you guys out there, right? If you really want to become rich, or if you're too young and you're not thinking about retirement just yet, then your best bet is to become an entrepreneur, okay? Work hard, invest your money in a good business, build your business, right? And then, when the time comes, maybe you can start to do a little bit of value investing for your retirement. But if you want to be a millionaire, or if you want to be a billionaire, value investing per se, it's not going to get you there. Building your own business, that's probably what's going to get you there. But mind you, okay, starting a business or acquiring a business comes with its risks. It's high rewards, high risk, right? So you're more likely to become a billionaire if you start your own company, or if you buy a company and run a company, but you're also more likely to go bankrupt, right? So you have to weigh that and make your decision. Okay. All right. Okay. So that is all for today, and this is the end of the valuation series. So I hope you enjoyed it. So far, we had 6 videos. In the first video, we covered how we screen for value stocks. In the second video, we covered the financial analysis of a company. And then we did another video on how we validate a business. And the next one was about business valuation. Okay, what's the intrinsic value of a business? Then we did a video about my buying decisions and my recommendations for portfolio management. And in this video, we close the series with, the decision process on how to sell or when to sell a position in a business, and then other considerations about value investing. So I hope you enjoyed the series. Coming back on this channel, I plan to do some analysis on several stocks. So I'm going to try to follow this plan here. So I'm going to do a video on valuation, validation, and financial analysis on Intel, Berkshire Hathaway, Rio Tinto, Applied Materials, Lockheed Martin, and Microsoft Corporation. Right. So, and then I'll do other companies. If there is any particular company that you would like to see a video evaluation on, drop me a comment below and I'll try my best to do a valuation on that company. Okay. So I hope you enjoyed it. If you like this type of videos and if it gives you value, please give me a thumbs up. This will let me know that there's people out there interested in this type of information, and I'll keep on doing these videos. Also, if you want to be notified on the upcoming videos on valuations on those companies, just subscribe and click the bell icon and you'll be notified when I upload the next video. So that is all for today. Thank you very much and stay safe out there. Kinzo vi! Arigato gozaimashita!